Hey everyone, my name is Ian. I am a dividend stock investor with over 20 years of experience. I am here in the beautiful Carmel Valley in California, and I want to share with you today the number one secret, in my humble opinion, to being a successful stock market investor. And I have spoken extensively on my YouTube channel here about fundamental dividend stock analysis, how to analyze financial statements, how to pick stocks, how to buy the best stocks. And believe it or not, I don't think that that is the top thing about being a successful investor. In fact, the number one secret that I think comes to play in being a very successful investor is having self-confidence, and it is this rich mentality, this rich mindset, if you will. And I think so many of us are conditioned in the modern world, in the modern rat race, if you will, to have the poor mentality, the poor mindset. And so I want to explain in the video today the difference between the poor mindset, the difference between the rich mindset, and hopefully I want to impart on everyone watching just a bit of self-confidence. And so I'm going to talk about a whole bunch today. I'm going to start with the philosophy, I'm going to start with the high level, if you will, and then I'm going to get into specific stock market examples. Ones both where I had the rich mentality and it worked out really well, but also examples where I had the poor mentality and it did not work out quite as well. So get ready, everyone, for an exciting dividend investing video. All right, everyone, so I'm going to start today with the high-level philosophy behind it all. Now, just think back when you were a child in your childhood. I see this in my kids. When you are a child, you really believe that you can do almost anything. And hopefully, if you're raised the right way, if your parents, if your teachers, if those around you impart their best efforts, their best wisdom, they kind of cultivate this curiosity where you grow up thinking that you have all this curiosity, that you can do anything, that you can pursue all of these different dreams. And a lot of that mentality sticks with you through the years. But I know from personal experience, once you hit a certain age, once you kind of reach that workforce, the working age, and especially once you start trying to climb the corporate ladder or the job structure ladder, things change a little bit. Now, I'm not saying it's always this way, but certainly at most big companies, if you will, there is a structure. There is a fixed structure that's in place, and it is possible to climb that structure. I am living proof of that I went from an entry-level associate at a company to a vice president level at a publicly traded company within a very short amount of time. So I'm living proof of that. But at the same time, in my journeys over the years, in my experience over the years at big corporate companies, I certainly have also picked up that there is this sense of structure. And quite frankly, as you get higher up the structure, there's less and less spots available because it's somewhat of a pyramid structure. And so the entire system, if you will, and a lot of this, in my opinion, just comes from kind of the Industrial Revolution era, these olden times where there's a structure that's in place, and a lot of us start going from this mentality of being able to conquer the world, this mentality of being able to do anything, to this mentality of, hey, my boss told me to do this, I'm only capable of doing this. Or my boss said, I can't do this, I'm not ready for this. There have been so many times, or especially earlier in my career, where I would have bosses that would tell me, Ian, you can't do that. You're not ready for that. You're not going to reach that level. And I started internalizing a lot of this feedback. I started internalizing a lot of these messages. And I think this is, quite frankly, one of the biggest scams that is out there, and is really when the mentality in a lot of people starts changing from the rich mindset to the poor mindset. I think all of us, or a lot of us at least, grow up, regardless of kind of where we are in the world, kind of thinking, hey, as a kid, I can explore the curiosity, I can do what I want. But as you get older and you start getting into these certain jobs, and I'm not saying all managers are like this, certainly I've been a people manager over the years, and I really take pride in being a great people manager and trying to cultivate talent and have people do their best work and get to higher positions within companies. But I'm just saying, not all managers are like that. And the managers that aren't like that, it's not always deliberate. People aren't always deliberately trying to hold you down. I'm just saying it's a sense of structure. It's the structure that's in place. It's kind of subconscious in many ways. And I've just noticed even in myself that I've gone in some regards in my life, I kind of analyze back in the life, and I go from a rich mentality to a poor mentality. Now I'm back at a rich mentality again. And so one of the first things I want to tell everyone watching the video today is that if you want to be a great stock market investor, if you want to be just a great success in life, even at your job or in your family life, whatever you do, if you want to be a great marathon runner, long distance runner, I actually just ran a 5K yesterday. It was a lot of fun. You have to remember and harness this energy from your childhood. You can't go and be very successful having a poor mentality, internalizing this feedback that you can't do this, you're not capable of doing this, you're not good enough to do this, your analysis is wrong, you should distrust yourself, you should distrust your passions. No. You have to approach everything with a high level of self-confidence. Now, obviously, you can't have confidence if there's nothing that's behind it, but I'm just saying for myself, someone who has poured countless hours of research into stock analysis, someone that has poured just tireless nights into hard work, cultivating myself as a great investor. Despite doing all of that, there has at times been a voice in my mind saying, Ian, you must be wrong, or Ian, don't take that risk, it's too risky. Ian, don't do that. There has been that voice at times where I haven't had the right confidence behind all of my analysis, and I have missed out on good opportunities. However, there have been times as well where I have harnessed the energy, I have harnessed the confidence. I especially experienced that this year. I experienced it this year when the stock market crashed in March and April, and I started scooping up shares on discount of Home Depot, Johnson & Johnson, 3M Company, StarBucks Company, and others. I started scooping up those shares because I knew before the crash, I did my analysis. I knew before the crash, Ian, you don't have that poor mindset, you have the rich mindset. And I cultivated that energy before all of this happened so that when the crash happened, I took advantage of it, I stepped in, I had the self-confidence. A lot of people out there on the internet were telling me, Ian, you're crazy, this thing's gonna fall a lot more. Ian, you're crazy, the apocalypse is coming. But I knew I had the confidence in myself. And in the second part of the video today, I'll go through these specific examples. I have been rewarded handsomely because of having that confidence. Now, in more recent months, more recently, people have been questioning me, Ian, you're buying some of these big oil stocks again. Ian, you're averaging into Chevron, into Royal Dutch Shell, into BP, when things are really bad for that industry right now, where everything is headed towards electric vehicles, where everything is headed away from oil. But I know from my own research, from my own fundamental stock market research, that all of that skepticism out there, in my humble opinion, is not accurate. And so I have a rich mentality around it. I have the confidence around it because I know I did my homework. And so I approached those investments as such. And even though everyone was telling me not to do it, even though that voice inside my head a little bit was giving me a little bit of skepticism, I knew to override that because I have the confidence, I have the rich mentality, and already those oil stocks have surged from where I bought them. Just last week, I bought more shares of Wells Fargo, and again, people are telling me, Ian, that's the worst bank. Ian, that bank is awful. A lot of these anecdotes are coming from people who had bad personal relationships with the bank. But I know, and I'll link to it in the description below, earlier this year, I did an extensive dividend stock analysis on Wells Fargo. And when I did that analysis and I benchmarked it against some of the other big companies like Bank of America and JP Morgan Chase, you know what? My analysis showed me that it was the best one. And so even though everyone else is telling me Wells Fargo is the worst bank stock, all I know right now is when I did the analysis, it told me it was the best one, or at least one of the best ones. And I know right now, Wells Fargo is a heck of a lot lower in share price than when I first started buying it earlier this year. And so I have the confidence, I have the rich mentality, I have the mentality where I can take in skepticism, I can acknowledge it. I don't want to blind myself to it. That's one of the best parts of the dividend stock community here, is that we are all open, receptive to feedback. We benefit from the group knowledge, but at the same time, I'm also able to really rely on myself and rely on my own confidence in what I did, what I analyzed to take those steps. And so there's kind of two things I want to talk about right now, and there's kind of two steps to being an investor. The first step is just starting out with investing. It's just getting started, drawing a line in the sand. That alone, so many people fail to do that because they hear skepticism. They hear from others out there, hey, stock market is too risky. Hey, stock market is like a casino. Hey, the stock market is at all-time highs. And they may have even heard from people even in unrelated things, maybe in their jobs, for example, hey, you're not good enough. Hey, you're not going to be promoted to the next level. Hey, you're not director level material. You know, you're always going to be a manager. You'll never be a director. And people internalize this stuff, and it turns them from this rich mentality to the poor mentality. And what I'm here to argue today is to challenge yourself, do your own research, challenge yourself to be better, to improve, to have that rich mentality, to have that self-confidence, because the moment that you take a step from being a non-investor to an investor, your life will change. That's the moment where you're basically building yourself a nest egg. You're building yourself a stream of passive income. You're building yourself a small business, if you will. I look at my dividend portfolio, quite frankly, as my own small business. It's a collection of businesses. I run it. It's my machine. It's my baby. It's my portfolio. And regardless of what people tell me, regardless of what people say at the job, or anyone out there says, you're not good enough, you'll never reach this level, it just doesn't matter because I have the confidence in my dividend stock portfolio. I see the results firsthand because it's spinning off cash flow really quickly and giving me a lot of cash flow now that I've been doing this a long time. And so I see the proof right in front of me. And obviously that gives me more confidence. I'll tell you, these days, why did I have so much confidence to buy all these stocks and to go so aggressively in March and April of this year? It was because of my experience and because I've already come really far. And so I'm trying to give that experience to everyone here on YouTube. I'm trying to give that perspective because you may not be where I am yet. Some of you are a lot further than me. I know some of you are much more successful, but some of you are just getting started out. Some are in the middle. I want to give that confidence to all of you out there. And now I'll tell you the second thing that's a lot harder in investing than just getting started, because getting started, yeah, you'll have some naysayers, but it's possible to cross that line and it's possible to get started. And once you get started and you start buying stocks, that is somewhat cyclical. Like once you start buying, you want to buy more. You want to keep buying more because it's so exciting to buy all of these dividend stocks. But I'll tell you what's more difficult is sometimes it's when you're a little further in your investing. Sometimes it's when you've made it a little bit further and the market tanks. That's when you start doubting yourself. I bet you there's so many people watching this video that when the market started tanking in March and April, maybe they didn't buy stocks. Maybe they started doubting their research. They started doubting their plan. They started doubting what they were doing. Some people out there, unfortunately, my heart goes out, they may have even sold stocks. And look, my mind has been there before. Not this go around, but in the past when I've faced market corrections earlier in my investment career. One time I was even having a conversation with my wife and I was saying, oh my goodness, what if it goes down more? We should sell it. And she was the voice of reason who had told me at the time, no, my grandmother had invested in stocks over the long term and this is some of the wisdom that she had, and we look at it more level-headed and we shouldn't get emotional behind it. And so that's another thing out of all of this. When you're trying to go from the poor mindset to the rich mindset, you're trying to have the confidence in your investing. Obviously, behind all of that, you have to put in the work, but it's also smart to surround yourself with like-minded people, to surround yourself with champions who champion you. And surely that might not always be possible because at work, maybe people don't believe in you as much. Try to block it out. Certainly if you're around people that don't believe in you as much, don't talk about your investing with them. That's why I created this community here on YouTube, on the internet, so that we can support and lift each other up. And then obviously try to critique yourself as well, because you may be your own biggest skeptic as well. But again, getting started in the investment, that's kind of one hurdle. But the second hurdle is really believing in yourself when times get rough. And this is why I like to analyze all the stocks. Right now, I just analyzed Church & Dwight. I analyzed Hormel, Kellogg Company. Maybe Kellogg is an okay value here, but Hormel and Church & Dwight, they're not good values here. But the reason I look at them is so that I understand and I do my fundamental analysis ahead of time. I have the confidence, and now when they tank at some point in the future, I don't need to redo the analysis. I don't need to second guess myself. I need to believe in myself because I know, Ian, you already did all the analysis. You already did it. You have the confidence in your strategy. You have the rich man mindset, the rich person mentality. It's time for you to go ahead and buy them. And so that's really the second case where the rich person's mindset makes such a big difference in dividend investing and all types of investing, is it's not only getting started, but it's having the confidence behind the analysis that you do. It's like me right now with Wells Fargo. Everyone's telling me, Ian, don't buy it. But I did my analysis, and when I did it, I really liked the bank. I'm having confidence when no one agrees with me. There's a few people out there, but very few people agree with me. We will tell in a year, 2 years, 3 years, whether I was right or wrong. So far, in recent history at least, I'd say last 5 years or so, my shots that I've been calling in investing, they've been pretty good. They've been pretty good. Not all the time, but a good percentage of the time. And so one stock I'm going to talk about in the second part of the video today is Cedar Fair as well. So Cedar Fair is one, I'll tell you, I'm not perfect. In the most recent stock market crash back in March, April, I did not buy more Cedar Fair. I was thinking about it. This is one, and I look back at it now, I've done so much analysis on this thing. I have so much confidence in it, but for some reason, I just didn't quite do it. I bought everything else, but I didn't buy more Cedar Fair. And you know what? Since the bottoms now, it's basically like doubled or tripled. I'll show the exact stats in the second half of the video today. But that's an opportunity I missed out on. And the only reason I didn't buy more of it is on that particular stock at that particular time, I didn't have the rich mindset. I didn't have the rich mentality. I had more of a poor mentality. I had more of a skepticism, even though I put in the analysis. And that I would say is the definition of the poor mentality is you know you did the analysis, you know you put in the homework, but you still doubt yourself. That is the quintessential wrong mentality to have in the investing game, in my humble opinion. And so I'm going to go into the second part of the video today where I really take these stocks that I mentioned in the first part of the video and I show you some of the results in real time so that you can see right in front of you when I've made some of these great calls because of having the right research, the right mentality in place ahead of time, and also that Cedar Fair example where I didn't quite have the right mentality, and unfortunately I missed out on that one, but I continue to evolve, I continue to learn. And so thank you for joining me here in beautiful Carmel Valley today for this video. Please give a like, put a comment below, subscribe, all of that good stuff if you want to support these videos here on PPCE, and I love you all. Get ready for the second part of the video. Before you do that, please smash the like button, and I'll see you in the next half of the video. All right, everyone. I am back at home right now, and I want to share with you some specific stocks, some specific examples this year in 2020 where I had the rich mentality and also where I had the poor mentality, because I am always improving and there are times when I still do have that poor mentality. So check it out on the screen right now. And what you can see in front of you are a few stocks. This isn't all of the stocks I've been buying this year, but I wanted to pick some that are representative of my overall strategy. And what you can see are Starbucks, 3M, Wells Fargo, BP, and Cedar Fair. So 5 different stocks that are quite representative across my entire stock portfolio. I have the current price per share, or PPS, listed there. Starbucks is at 98 and change. 3M is at 172 and change. Wells Fargo, 27 and change. BP is at 19 and change. It was nice to see that one dip down today. I might buy some tomorrow if it dips further. And Cedar Fair is at a surprising $38 and change. I'm surprised it has rebounded so quickly. I also show the 52-week high and also the 52-week low. You can see that Starbucks is hovering right around its 52-week high. 3M, same. It's about $10 lower than the 52-week high. Wells Fargo is quite a bit lower than the high. BP is quite a bit lower than the high. And Cedar Fair, it's a bit lower than the high. When you look at these lows, it's astounding to see that the low is roughly half of the current share price on Starbucks. The low for 3M was 114. The low on Wells Fargo, it's not so dissimilar to where we're trading right now, $20 and change versus where it is right now is 27. BP, not too dissimilar from where it is right now. The low is 14, whereas it's trading at 19 and change now. Cedar Fair, I highlight this. I regret not buying this in the teens. It had a low of $13 and we're already up at $38. And so on the lower part of the screen right now, what you can see are my purchase history of these stocks. And the proof here really is in the purchase history. You can see where I had a rich mentality and where I did not. And so StarBucks, I actually had 30 stock transactions throughout the year so far in 2020. This does not count reinvesting dividends. I'm only showing net new purchases on the screen right now, net new capital infused, not dividend reinvestment. And I highlight in yellow the purchases I am most proud of because with a 52-week low of $50, you can see I was buying aggressively in the 60s and in the 50s. And in fact, I bought one tranche of Starbucks at $51.22, which is just $1 higher than the 52-week low. And you can see that I did get another tranche in the 50s, and then I have 4 different tranches in the 60s. And so Starbucks is a quintessential example of how I believed in myself, I believed in my analysis, I believed in the company, and when everyone was running for the hills, I even got comments here on YouTube, people saying, Ian, people aren't going to drink this expensive coffee anymore. But my intelligence that I have and also that the community has told me otherwise. There were reports from all over the PPCE and community that, hey, yeah, in March, April, Starbucks was a little slower. But other than those 2 months, Starbucks locations throughout 2020 have been very busy. And I always had the hypothesis that Starbucks these days, it's kind of a simple pleasure, a modern convenience that despite how bad the economy gets, despite how bad the pandemic gets, people aren't going to give that up. And my conviction paid off. I was right. I had the rich mentality. I believed in myself. It paid off. Let's keep going. I want to talk about 3M next. What you can see on the screen next to Starbucks is my 3M purchase history. I made 16 different purchases of 3M this year. I started buying 3M a while ago, a few years back, actually, I believe, in the 200 plus range. And so I've had a lot of conviction in this one, a very rich mentality. Part of being a successful dividend investor is when you see a declining stock price to get increasingly excited and happy because you're buying the same stock at better values. You're getting better and better increasing value, more shares for your money deployed, better value, better dividend starting yield. And that's what I realized with 3M. And so as it kept dipping, it did have a low, a 52-week low of 114. I think it only hit that low very momentarily because the best I could do was 125, which is a good $10 off the low. But I highlight these tranches. I had one at 125, and then I had 3 different tranches in the 130s, and then I had a bunch of other tranches throughout the years that I would call attractive, especially the ones in the $140 range as well. And so again, 3M, there were so many skeptics this year on 3M. There were so many people saying that their business in the aviation industry, it's going to hurt so bad that no matter what they do with their ventilators, with their N95 masks and the rest of their business, it's not going to compensate for it. But you know what? I had conviction in 3M. I have conviction in the fact that this company makes so many different products across so many different lines of business. I even found 3M Thinsulate fabric in my brand new boots. I'll share a picture of that on the screen right now. It's really cool. I'm so excited and happy to see that the 3M Thinsulate is there in my new boots. But I had conviction. I had a rich mentality. I knew that I was down on this thing. I knew that I was buying a lot higher. But I did my research. I did my homework. And I met the declining share prices with enthusiasm. Let's keep going. And so Wells Fargo is the next one. I listed here as rich, but honestly, I kind of had a rich and poor mentality on this thing. I started buying early this year in the 40s, in the high 40s, and I bought a bunch of tranches in the 40s. And then when it started falling, it had a 52-week low of $20 and change. And so I got in at $23.98, almost $24. I feel like I timed that pretty well. I got in very close to the low. But I'll tell you, there's a lot of time that's elapsed between July and November, where I bought more at 28, and I highlight both of those purchases in the 20s. I think those are both really good rich mentality buys, but at the same time, there is some time that elapsed between July and November. And to be honest with you, a lot of the skepticism in the community, a lot of the reports in the community of, hey, Wells Fargo's a bad bank. Hey, Wells Fargo, it's not the best bank. Some of that started getting to me. I'm not going to lie. That being said, I overcame that temptation to fall into that poor mentality. I had to go back and take in these insights from the community and respect them for what they are. But at the same time, I need to respect my own analysis, because I'm in this based on my own thought, my own logic, my own decisioning. I went back to it, and I have renewed conviction in the fact that, hey, I did my analysis accurately. As long as this thing is at these good prices in these 20s, I'm going to keep buying. And so I'm not done with Wells Fargo. I may be buying some more tranches. I'm trying to redeem my rich mentality on that one, if you will. Let's keep going. So as you see on the screen next, BP. This one, honestly, I call it a rich mentality. I bought some early in the year at $39. This was before the pandemic. It was a time when there were no values in the stock market, but out of everything in the market, this one seemed to be a reasonable value, especially in terms of starting yield and cash flow. Boy, was I wrong on that at the time, because I did not envision that the pandemic would be around the corner. But when the pandemic hit, global oil demand dipped, and it tanked. And so with a 52-week low at $14, I got in pretty close to it. I bought at $16.70, so I highlight that. And BP fell again today. I'll probably buy more. And so, yeah, there is a lot of time that elapsed there. This one, though, I would say is different than Wells Fargo. I just don't have a huge appetite to allocate too much more capital to the oil sector. I have a position in my portfolio that is a representative position. It's a right-sized position, if you will. So I don't want to go too crazy with it right now. But at the same time, when oil stocks get to a certain point, I have to buy, because I've done my homework. I have conviction in the industry. I have conviction in the long term. And I think that oil demand is going to be very strong for decades to come based on my own research. And so anyways, I would call this one a clear rich mentality decision. And it's especially a rich mentality decision because there's so much hatred for this thing right now. I got nothing but love for EV, electric vehicle investors out there. All of you are doing really well, and I wish you the best. But from that community, from the EV community, I often get a lot of skepticism on the oil side of things. I think there's room for EV and oil. I don't think it's either or. I think it's both. And I think oil will be around for a very long time, because oil is used in so much more even than just automobiles. It's used in airline transportation. It's used in making plastics. It's used even in paving roadways. As long as there's electric vehicles, we're going to have roadways until they start flying, at least. And so with roadways, as we repave them, we need oil to do that. And so there are so many use cases for oil. It's not going anywhere. Global population is strong, it's increasing, and global oil demand will be there. And so anyways, I call this one a rich mentality decision because I avoided the skepticism and I went into some of the most hated stocks out there, like BP, as you see here, but also Royal Dutch Shell, Chevron as well. Let's keep going. And so the last one I want to show you on the screen right now is Cedar Fair. I started buying this early in the year before the pandemic at $46 and change. When the pandemic hit and this thing tanked to 27, I bought more, but I call this a poor mentality because I was skeptical. I remember even when I bought that $27 tranche, I was skeptical. I did it just out of force of habit because I have good habits as a investor. I've cultivated them over long periods of time. But when this thing kept falling below 27, I did not have the right mentality. I did not have the right mentality to buy more. And so I would call that a fail. And I don't want to be too hard on myself. This is the beauty of investing, is even 20 plus years into this, I keep learning. And I bet you once I'm 40 plus years into this, I will keep learning. And that's just how the game goes. Keep getting to the next level of the game. Now, certainly there are other stocks where I had the rich mentality that I don't list on the screen. I would say Home Depot, Johnson & Johnson are two really good examples. There are other stocks where I had the poor mentality. One of the quintessential stocks other than Cedar Fair where I had the poor mentality was Honeywell. I avoided Honeywell after it dipped because their dependence on the aviation industry. And it's kind of all the skepticism that I overcame on 3M and I didn't even worry about. I let that seep into my Honeywell decisions, and now I regret it because I did not buy Honeywell at lower prices. To be fair to myself, though, I did go pretty strong when prices were lower, and I just don't know how much more capital I honestly had to deploy. But that said, there's always more capital. When prices are low, I can always find ways to get more capital going. And so those are the specific examples today. I want to acknowledge a quote on the screen right now that I think is really impactful. There's a rapper that I really enjoy. His name is Rick Ross, and he has a track called Presidential. This is probably one of my top 10, top 20 favorite hip-hop tracks of all time. It was produced by Pharrell, and I actually was watching, I really like hip hop, so I go into the details on these things and I research them, and I research the lyrics behind the songs. I research what it was like producing the song, what the artists were thinking at that time. And so I was watching an interview on YouTube where Rick Ross and Pharrell were talking about producing this track. And I'm going to put on the screen right now just a brief quote of what Pharrell was saying at the time, because I think it's a perfect way to close out this video on rich mentality versus poor mentality. Because Rick Ross and Pharrell, they both have the rich mentality and they both are insanely rich. And honestly, I don't know Pharrell's story as much, but I just read Rick Ross's book. I summarized it for my Patreons on my Patreon. I will link to that in the description below if you want to join. I have almost a 30-minute video there on Patreon summarizing what I learned from that book review, and I review the book and how it relates to investing. But anyways, check it out on the screen right now. And what you can see is a really, really interesting quote from Pharrell. And he basically says, and this isn't perfect because I typed it in as I was listening to him, and I had to listen to him a few times to get this quote perfectly. But he basically said, as a child, I was like, yeah, I want some red Jordans. It took like 20 years for it to happen, but it finally happened. But that's just the way we think, always entertaining the impossible. Versus, you know, that does not exist. You know the non-existent versus what everyone else is doing. Gotta let everyone do what they do. This ain't no sprint, it's a marathon. And basically this was Pharrell on his experience producing Presidential, which is such a fabulous, fabulous beat and a fabulous track. And basically what he's saying in this particular quote is he has the rich mentality. It took him 20 years to get those red Jordans, but he didn't think, oh, I'll never get those red Jordans. He didn't let, some boss at some company tell him, hey, you'll never get to that level. You'll never make it. No, he entertained the impossible. He entertained the impossible that, hey, yeah, one day I will have those red Jordans. It just took him like 20 years to get them. And what he also layers into this quote is basically that he does not worry about what other people are doing. He doesn't worry about what doesn't exist. He's not worrying about the non-existent. Non-existent to him isn't non-existent. It just means it hasn't happened yet. He's thinking of the opportunity that is ahead. And so he doesn't let the haters, he doesn't let the non-existent get to him. He just focuses on his future. And so I think that is, in essence, an example of a very successful person speaking of the rich mentality. Hey everyone, if you could take a moment to smash the heck out of that like button, there is nothing that would help me more. I would really appreciate it. Also, please remember to comment, to subscribe, to share this video on social media if you think it could benefit anyone out there that you know. I put a lot of time and effort into this video, and I hope that it impacts a lot of people out there. I love you all. Check me out on Patreon. I'm up to 10 videos on there that you can unlock instantly when you join as a patron for only $3 a month. And I'll link to that in the description below in case you're interested in giving yourself that gift this holiday season. Before I leave today, in terms of full disclosure, I am long the stocks mentioned today. I own Home Depot, ticker symbol HD, Johnson & Johnson, ticker symbol JNJ. I am long 3M, ticker symbol MMM. I am long Starbucks, ticker symbol SBUX. SBUX. I am also long BP, ticker symbol BP, Chevron, ticker symbol CVX, Royal Dutch Shell, ticker symbol RDSA. I am long Honeywell, ticker symbol HON. I am also long Wells Fargo, ticker symbol WFC. And I am long Cedar Fair, ticker symbol FUN. Before I leave today, in terms of a friendly disclaimer, today's video is not investment advice. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed investment advisor first. Investing in the stock market carries tremendous risk, especially in these unprecedented times right now. Just sharing my journey here on YouTube for fun and entertainment. I will see you in the next video. Don't forget to smash the like button. I love you all. Have a great day, everyone.